Hi, welcome to Archiversity online classes. As an investor, you should know when to enter into the market and when to exit the market. More precisely, you should know when to buy a stock and when to sell a stock. In technical analysis, we call this as buy signal and sell signal. There are many technical analysis tools which help you to predict the stock price movement and which gives you an indication of whether to buy a stock or sell a stock. The most popular technical analysis indicators are: one is a moving average and second one is exponential smoothing average, or we can say as a weighted moving average. In this lecture, I am going to explain you how to identify the buy signal or a sell signal of a stock using simple moving average. And for this purpose, I choose two stocks. One is Adani Green and the second one is the State Bank of India. The purpose of choosing these two stocks is that in some scenario, the simple moving average will give you a clear indication of a buy or a sell signal. In other scenario, it may be inconclusive. In the sense, you may not be able to identify the buy or a sell signal. So to illustrate this, I choose these two stocks, that is Adani Green and State Bank of India. Now we'll see how to calculate a moving average and interpret the result. Here are the daily close prices of Adani Green for the period 1st April to 30th September 2020. Now using these closing prices, we'll calculate the moving average. Now while calculating a moving average, you can choose any days as a moving average. In the sense, you may choose a 5-day, 10-day or a 100-day, 200-day. That depends on your investment horizon. So if you are making an investment for a long term, then you can look at the price for a long-term moving average. If you are looking for a short-term trading, then you can go for a short-term moving average, right? So here, making an assumption that we go for a short-term trading, I am using a 5 days simple moving average. So to calculate a simple moving average in Microsoft Excel, you need to click on a data, then data analysis. From data analysis, choose moving average. Select the moving average, then click OK. Now give the data for input range. Select this one by clicking up arrow. Then select your data. Place your cursor in a first cell. Then hold the shift key. Then press end key and down arrow. So that your total data got selected. That is, your closing prices got selected. Then click on a down arrow. Now click on labels in a first row, because the company name is there in a first cell. Then interval, here you can give your interval, in the sense for how many days you want to have a moving average. 5-day moving average, 10-day, 20-day, 100 or day or 200-day. Now in this case, I am taking a 5-day moving average. So I am giving an interval as 5. Then output range, click on up arrow here. Then select the cell. Let us say I want to have a data from C2. I select this cell, then click a down arrow. Now click OK. Here you can see that the 5-day moving average is calculated here. So first 1, 2, 3, 4 days of data is not available because you are calculating the average for the first 5 days. Thereafter, second day to next 5 days, and then third day to next 5 days. Like that, the moving average is calculated. How is that we are going to use the close price and moving average to identify a buy or a sell signal is we need to plot this on a chart. So first what we do is we copy the names here, then paste it in a separate columns. Now select the data where from you have both the observations, that is close price as well as a moving average. So this is a 5th data point. So select this, then hold the shift key, press end key and down arrow. The data got selected, and Control C to copy. Now while pasting here, instead of directly pasting, you need to use a paste special, because the simple moving average is calculated using a formula. Now if you paste here directly, then it gives you an error. To avoid that, you have to use paste special option. For that, right click here, then here you will see the paste special options. In that, choose the values 1, 2, 3. Here you can see the value here. So choose the values then click on this. Now you can see both the close price as well as a simple moving average of 5-day values are here. Now we'll see the end. All right. Now what we do is we'll plot these two, that is a close price and simple moving average, on a chart. For that, first select the data. Data got selected, then click insert. Then click on a line chart. Then select the line with the markers. As you see, the chart is here. Now I'll expand this one. So the orange line indicates simple moving average, whereas the blue line indicates the close price. Now how is it we are going to identify the buy signal or a sell signal is whenever the stock price, that is the close price, crosses or above the average price, that indicates a buy signal. So here you can see that at a point 34, 247 rupees is a buy signal here, and you can continue this up to this point, and when the close price is below the moving average, that indicates a sell signal. So here you have to sell. In the sense, if you don't want to hold the stock for a longer time, you can sell here. That means you have to exit here, then entry here. But for this time period, from, if you observe here, from observation 63 to almost here for a 93, during this period it is an inconclusive one. There is no indication of whether the buy or a sell. Now after this, at point 93, the close price is above average price, and which gives you a buy signal. So you can buy this stock here, and whenever it reaches here at a point 113, this indicates a sell signal. In simple terms, when the close price is above a moving average price, it is an indication of a buy signal, and when it is going below, then it is an indication of a sell signal. This kind of a clear signals may not be present with every stock. Now we'll see another stock, that is the State Bank of India. Here is the State Bank of India. Then we'll calculate a simple moving average of a 5-day. Then we'll do it fast here. So to get a moving average, click a data, then data analysis, then moving average. Select the moving average, click OK, then select your close price. So as both the data has the same, it is the same here. Then interval, 5-day moving average, output range C2, then click OK. Now you can see the moving average is here. Now copy these two, paste, then select the close price and a moving average price, then copy here, copy paste as a paste special values, because your moving average has a formula in that. Now as you selected these two, plot this on a chart. For that, click insert, then a line chart, then line with the markers. The chart is ready here. Now you see here. So here most of the times the moving average as well as a close price are very close, in the sense at one point here and at one point another point here. Here is only two places where you can see a clear indication of a buy signal. Remaining all places, this is inconclusive one. So this is another example where you may not be able to predict the stock price using a moving average. So this kind of a pattern you will see in the stocks, where the stocks are trading in a trading range, in the sense the positive side and the negative side of this stock, there is a price increase or a price decrease, is within a certain range. In those cases, the moving average may not give you a clear indication of buy or a sell signal. So this is how you need to calculate the simple moving average and plot it and interpret to make a decision about whether to buy a stock or a sell a stock. In my next lecture, I am going to explain you how to calculate exponential smoothing and use those values to predict the stock price, that is whether to buy a stock or sell a stock. Thank you for watching lecture.